Hi everyone, welcome to Thursday, and normally every Thursday we do a share and review. However, there has been a new bond issue. This time it's from Oceania Healthcare, so I thought let's evaluate that. Now, before I do, I just want to quickly share my screen. If you're an employer, I have created a really short, simple 2-minute assessment. You can see this here, and it's all about discovering your team's money stress and basically the risks to your business. What it does is it diagnoses the financial well-being of your team, and it will pinpoint the fastest improvements that you can make to help your team's performance, because statistics show us that if you have team members that are suffering from financial stress, money management issues, all of these sorts of things, it has a huge impact on your productivity. So I'll share the link to this, and then you can take that free assessment and see how your business stacks up. I just wanted to quickly show you that because it's a really good assessment to, like I said, gain how your team is performing from a financial perspective, and it also means that for your business that you're retaining high productivity. Right, I've made a note sheet, if you like, on the features of Oceania Healthcare. Now remember, this is for education purposes only. It is not intended to be personalised financial advice. If you're looking for that, go and have a chat to your own financial advisor. Let's take a look and see the features of the Oceania Healthcare bond issue. So this bond issue with Oceania Healthcare, it's a secured fixed rate unsubordinated bond. So it is secured against the assets of Oceania, and I'll talk about that in a moment. The purpose of this is to repay any existing bank debt and to provide funding for general corporate purposes. Now, I spoke about this last week. Quite often you'll see corporates issue bonds and repay existing bank debt from it. It's twofold, really. They issue bonds to set an interest rate, which this one has been set at 5.55% per annum, and it's for 6 years. Now, they set that higher than what you and I can get if we invested our money in the bank on term deposit, for example. Yet for Oceania, it means that they are paying an interest rate that is less than what the banks would ordinarily pay them. So from that perspective, it's a win-win. Now, with a bond, you do have to hold them until maturity, or if your circumstances change prior to maturity, the maturity here is the 1st of July 2032, if your circumstances change prior to that, you can sell your bond on the secondary market. Now, the value of that bond will depend on the interest rate. So if I use a pen and give you an idea, the interest rates go up, the value of your bond will go down, meaning that you could make a capital loss. The interest rates go down, the value of your bond will go up, meaning that you will make a capital gain. Capital gains are taxable, capital losses are tax claimable, so remember that. Now, during the life cycle of a bond, it will always fluctuate. However, if you hold it until maturity, you will always get your face value back. With a bond as well, remember that the interest, they are paid quarterly in this example. Irrespective of when you sell your bond, if you're selling it on the secondary market, you will always get the interest up until the date that you have sold it. If you hold it to maturity, naturally you will get the interest payments on the payment frequencies, as I've got up here on the screen, and again at maturity. So the minimum investment was $5,000, thereafter $1,000 parcels. Now, the feature of this bond is that it is secured, and like I've said before, it is secured in form of mortgages over many of Oceania's properties, and it does say general security over the company's assets, so that can be a little bit vague. It does say down here that it ranks equally alongside any other secured bank lenders, for example, although the retirement village statutory supervisors have priority over certain retirement village assets. So again, that's quite vague, so you need to do your own research. And it says here that it's considerably stronger than investing in unsecured corporate bonds. Well, To be honest, the least riskiest investment you can have is an unsecured, unsubordinated bond, and that's the most senior one that you can have. So it is down the pecking order, just one little step. It says here that the funds are being raised to reduce the bank debt and support general business operations. Now, the thing that you need to note as well is that the bonds have not had a credit rating. So in other words, Oceania have not applied to the credit rating agencies for a credit rating on this bond, for example, Standard & Poor's or Moody's, to assess the ability to be able to repay the debt. So you do need to take that into consideration. I've talked about early redemption. So if you want to redeem it early, it is up to you to sell those bonds on the secondary market. Obviously, Oceania is not required to repay these bonds early unless there is an event of default, which, okay, then that leads into other issues as well. So the strengths of this, obviously, it's 5.55% for 6 years. Quarterly income is paid over this, and it is listed on the New Zealand debt market, which means you will be able to trade that bond. So the overall consideration that you need to make for this is really that credit rating, your time frame as well as to why you're wanting to invest over this. So it is, like it says here, it is fairly typical of New Zealand corporate bonds. It's really similar to the bond that we talked about last week. So it is up to you. Just stop sharing. It is up to you whether this is going to be an appropriate investment vehicle for you. I just wanted to highlight the features of it and that of a bond. So bonds are really good for people who are looking for good cash flow to obviously help with income requirements, streams, that sort of thing. But definitely do your research on this and definitely talk to your registered financial advisor. I do know Forsyth Barr and Craig's were a couple of the lead providers of this bond. So go and have a chat to them and they will hopefully give you direction if you are considering participating in this particular bond offer. So anyway, until next week, I hope that's helped. We'll see you then.